可以有目标就往上爬。你相信你可以勇敢地往前冲吧。
Hi everyone, very morning. Good morning to all of you. Wow, you guys are so early. Yes, later at 11 o'clock, we are going to reveal the other secret, another secret on techniques to solve tax audit issues. And you know what? Today I am going to share with you this secret to solve tax audit issue on entertainment expenses. Yes, I know a lot of you would have incurred entertainment expenses, and did you know this could be an issue when it comes to tax audit, and how did we actually solve our case? Yeah, later I'll share my secret with you. Yeah, but you know what, since you're so early, since you joined us so early, which our FB Live will start at 11 a.m. later, can you just help me do one thing? Do one thing very simple, that is to share this Facebook Live out with your friends, your family, your business partner, your business associates. Let them also learn with you this secret, which I will be revealing very soon. Yeah, so take this opportunity right now to click the share button. See the share button below the screen, right? Whether you're viewing it from a computer or you're viewing it from your phone, you will see the share button, right? Click that share button so that you can share this out with people whom you want them to learn together with you. Because at 11 o'clock later, 11 o'clock sharp, we will start our secrets reveal technique to solve tax audit issues. Yeah, I will see you at 11 o'clock later.
我相信我可以有目标就往上爬。你相信你可以勇敢地往前冲吧。我相信我可以有目标就往上爬。你相信你可以勇敢地往前冲吧。有想法就有办法，有办法就不用怕。我们一起到达，是 number one。
Hi, good morning all. Wow, you know what? In just 5 more minutes, and we are going to start our Facebook Live session on secrets review, techniques to solve tax audit issues. And today, the secret that I'm going to reveal to you is how to solve this issue called entertainment. Yes, did you know that entertainment it can be an issue when there is a tax audit, and how did we help our client to solve that issue? Now I am going to share with you, I am going to reveal with you the technique that we have used to help our client to solve this tax audit issue on entertainment. And you know what, if you do not want to miss this, stay tuned, don't go anywhere, because we are going to start at 11 o'clock later, 11 o'clock sharp, and take this opportunity right now to share this Facebook Live out with your friends, your family, your business partner, your business associates by just doing one very simple way. Look at the bottom of your screen, you will see the share button, right? Click that share button, click the share button so that you can share this out with your friends, your family, your business partner, your business associates to learn this technique together with you, right? And don't forget, we have live Q&A session. Yes, I'll be answering to all your questions live later, yeah? So stay tuned, don't go anywhere, and please share this out with your friends, your family, your business partner, business associates by just clicking the share button below, right? So thank you everyone. I'll see you at 11 o'clock. I'll see you at 11 o'clock sharp, right? And we will start our Facebook Live at 11 o'clock.
我相信我可以，有目标就往上爬。你相信你可以，勇敢地往前冲吧。我相信我可以，有目标就往上爬。你相信你可以，勇敢地往前冲吧。有想法就有办法，有办法
Okay, it's 11 o'clock already. It's 11 o'clock already. And yes, here we go. We are going to start our secrets reveal techniques to solve tax audit issues right now. And today it's episode 4. It's episode 4 already. And I am going to reveal to you another secret, right? Another technique on how we manage to solve a tax audit issue. And today we are going to speak about entertainment. Yes, entertainment expenses. Well, I see there are almost 100 people and it's still going up. The numbers are going up, and I think will be more than 100 people viewing our Facebook Live today. And let's say good morning to everyone first. I see Richard Lyon again. Wow, hi Richard. Good morning to you. Welcome and thank you for your support for joining our Facebook Live on this tax audit issue again. Yes, now in case this is your very first time, joining us, today is already episode 4, right? Now you may say, hey, I've missed the previous few episodes, right? I've missed the episode 1, episode 2, and episode 3. So how can I view them back? Don't worry, you can just go to my Facebook page. That is Tax Guru Zen Chow. Tax Guru Zen Chow's Facebook page. You will be able to find the episode 1, 2, and 3 over there, right? They are all in the videos, right? You can always go back and view back the first 3 episodes. But of course, today it's episode 4, and if you are joining us right now, help me do one thing, right? We have more than 100 people already, but keep on sharing this out, because you know what, it's not often you see me revealing secrets to all of you, yeah? So share this Facebook Live out right now by just clicking the share button. Look at the bottom of the screen. If you're viewing it from your phone, you will see the share button. Click the share button, or you're viewing it from a computer, you can also click the share button. Share this out with your friends, your family, your business partner, business associates, so that everyone can learn this secret together with you, yeah? Alright, yes, Connie, good morning to you. Alright, so now in case this is your very first time joining us, right, let me introduce myself. My name is Zen, right, Zen Chow. Well, people call me the tax guru of YYC, but the fact is that I'm actually the tax director and the head of tax department of YYC Group. Now, I always like things to be very interactive, you see, because this is an interactive session and I'll be answering to your questions live, right? If you've got any questions, you can always put it into the comment box, which I will answer to you live. But let me just do some, just let me get to know you better, yeah? Now, we have more than 100 people right now, yeah? May I know how many of you here actually joining us for the very first time? If you're joining us for the very first time, please put 1. Please put number 1 in the comment box, right? If you're joining us for the first time. Of course, if you're joining us for the second, the third, or even the 4th time, you can put 2, 3, or even 4. Right? You can put how many times have you joined us, right? If this is your first time, put 1. Let me see how many first timers are there. But if you're joining us for the second, third, or even 4th time already, put 2, 3, or even 4, right, in the comment box. Let me see how many first timers over here. Wow, I have Managa Ganisan joining us for the first time. Carolise Krishnan also joining for the first time. Devin Lee, first time as well. Habib Faiz, Pike Chin Ng, Maggie, Wendy Tan. Wow, so many first timers. Well, I have Sioning, I have Brian Ong, Zafi Amira, Jacqueline Lam, and Joanne's the second time already. Chiu IQ, Michelle Lee, all second time. Wow, Yusan is my 4th time. Thank you so much for your support. Wow, Chiu Mei, Paul, wow, all first timers. Richard, I know you, 4th time. Yeah, good morning to you, Richard. Well, Liang Su Yun say many times, but forgot how many times. Yeah, Hazel, Connie, all your first timers. Thank you so much. Now, if this is your very first time joining, don't worry about the first 3 episodes, yeah? You can still go back to my Facebook Live page and you will be able to view the previous episodes, yeah? But if you're joining us for the very first time, well, this is a golden opportunity, because today we're going to talk about entertainment and I'll be answering to all your questions live. Yes, so today we are going to go into these techniques to solve tax audit issues. And well, if you're a first timer, like I said, you probably know I'm Zen Chow. Yeah, you probably heard of, well, Zen Chow is a tax guru, but well, like I said, that's just something what people call me. Well, I'm actually the tax director and the head of tax department, yeah, in YYC Group. Now you may wonder, hey, so who is YYC over here? Let me just take this short time to introduce who YYC is to all of you, yeah. Now YYC is actually an accounting and advisory firm, and we were established since 1974, yeah. Now, and our aim is to empower entrepreneurial success. But to do that, of course, we have our vision. Our vision is to be the #1 world-class accounting and advisory firm in Asia, right? And at the same time, our mission is more important because our mission is to inspire everyone so that everyone can overcome their odds. More importantly, find fulfillment in life. Yeah, that is very important. Yeah. Now, and in YYC, we have 3 brand promises, very important brand promises. And the very first one is to share expertise. You see, the reason why we are having today's Facebook Live, why we want to share our secrets, why we want to reveal our secrets to all of you, that's because we want to share expertise to everyone. And that's one of our brand promises. We also want to show the most proactive care to our client, not just normal care, but proactive care, yeah? Because we want all our clients to have the most positive experience ever. Yeah. Now, you may think YYC is probably just a normal accounting firm out there, which is wrong. Which is wrong. Why? Because YYC is not just a normal accounting firm. An accounting firm, a normal accounting firm, would have just compliance service like audit, accounting, tax services, yeah. But YYC has much more than that. We have our advisory arm, yeah, of which we do advisory services like strategic planning, restructuring, valuation, and even cloud transformation, yeah. We also have our own business school division, of which we hold a lot of seminars, workshop, talks from time to time. We also serve overseas companies, which means we have global business services like outsourced accounting, outsourced bookkeeping, outsourced payroll, etc. Now, if you see any of these services which you think, hey, this one interests me, well, feel free to drop us a message. Feel free to PM us, and our professional team will get in touch with you very soon to tell you more about these services. Yeah. Now, YYC, like I said, established since 1974, which means we are 46 years old this year, right? And we call ourselves an international firm. Yes, international firm. Why? Because we don't just have branch in Malaysia, we also have branch in Singapore. Also in Singapore, yeah. And we have more than 800 employees. We have more than 800 employees, more than 20,000 clients, and we have trained more than 120,000 participants throughout all our workshops because we have held more than 5,000 workshops. Now, these are all the awards given to YYC throughout all these years, yeah. Now, and like I said, YYC is an international firm right now. We don't just have branches in Malaysia, we also have branches in Singapore. Of course, in Malaysia, our branches are in Kuala Lumpur, Klang Valley area, Johor, and even Penang. Now, having said that, wow, thank you so much for all your responses. I see a lot of first-timers. Let me just ask you one simple question. Out of these more than 100 people, 130 plus people watching this Facebook Live right now, yeah, may I just ask all of you, where are you viewing this Facebook Live from? Where are you from? You can tell me which state you're from, which area, which town, which city you're from. Maybe you can just put it in the comment box. Let me find out more. Where are you guys coming from? I mean, I'm based in KL. Our headquarters in Kuala Lumpur, but let me know where you are from. If you're from Kuala Lumpur, you can be more specific which area of Kuala Lumpur you're from, right? Or you can just tell me which state you're from, which city, which town you're from, right? Put it in the comment box, right? Let me know more. Wow, I see Roni. Hi Roni, you're from PJ, right? So Habib Faiz is from Sungai Buloh. That's also Klang Valley area. Who else? How many more people are from maybe northern Malaysia, southern Malaysia? Anyone? Yeah. Ling Ling is from Kuching. Betty is from Kepong. Wow, so many people from Klang Valley area. Yeah. Devin Lee is from Penang Island. Wow, that's up north. Right. Then we have someone from Shala. We have Coney from Cheras. Richard from Cheras. Right. And Tech B from Taman OUGKL. Jasmine is from Batu Caves and coming for the very first time. Yeah, Jasmine, you put one, yeah, right. Natalie from Ara Damansara. Zafi is from Teluk Panglima Garang. Wow, that's very specific. From Selangor. Cindy from Puchong. Wow, so many people are from the Klang Valley area, but of course we have someone from the East Malaysia. Yeah, Ling Ling is from Kuching. Yeah, wow, and Hazel is from Ipoh. Wow, okay. Thank you so much. Thanks for telling me where you're coming from. Wow, I have more people say Yo Sun Guan from Klang, Chiu IQ from Penang, Lam Chong Leng from Puchong. Now, I know today all of you coming from everywhere around Malaysia, you don't just come here to see me. You don't just come here to tell me where you are. I know. You come here to learn my secret, yeah? Because I'm going to review my secret on techniques to solve tax audit issue. And yes, today, episode 4, we are going to talk about one more technique to solve this issue called entertainment. Alright, so today is episode 4, and we're gonna talk about entertainment, yeah, entertainment. So now let's first look at this concept. Okay, now I know many of you would have incurred expenses on entertainment, right? You probably have to entertain your client, entertain your supplier, entertain your own staff, right? Or even entertain some bankers, lawyers, etc., right? But now you may be wondering one very important question, that is entertainment deductible? If I have spent on entertainment, does it mean that I can save my tax? I can reduce my tax if I have spent on entertainment? Now, that really depends. That really depends, yeah? So let's first look at the general principles of deductibility on entertainment. Now, go back to the very basic. Now, those would have joined me for the first few episodes, yeah, you would have heard me saying this, yeah. The very general principle in the Income Tax Act 1967 says, right, under subsection 33, bracket 1, right, section 33, sub 1, yeah, for an expense to be tax deductible, it must fulfill these 5 elements, right? It must fulfill these 5 elements. What are these 5 elements? First, it must be an outgoing and expense, right? Of course, entertainment expense, it must be an outgoing, right? It must be an expense, right? It must be wholly and exclusively incurred for your business. Now, so if you're telling me that this is a business entertainment, then, well, it fulfills number 2, right? Because it's wholly and exclusively for the business. But if you're telling me it's a private entertainment, then it doesn't fulfill this, yeah, right? So it must be wholly and exclusively for your business, yeah? It must be incurred. That means it must not be an estimate, right? You cannot say, oh, I'm estimating that I'll be incurring such entertainment expense. No. That will not give you deduction. It must have really incurred. That means you have got an invoice, you have paid for it. Yeah, it must be during the period. That means you must have incurred entertainment during the accounting period. Then only you can claim expense, right, for that accounting period, and you can claim deduction for that accounting period. But most importantly, is always this one. It must be in the production of gross income, which means, yeah, whatever entertainment that you incur, that you have to spend, it must be for you to generate more revenue, generate more income. That means the aim, the intention of the entertainment is to entertain and get more income, right? And get more revenue. Then only it will be deductible. Yeah. So this is the general expense, right? General concept, yeah, of deductibility. But when it comes to entertainment, we need to look into more details, because even though if you satisfy section 33, it doesn't mean you get 100% deduction. Why? Because first, look at entertainment. Entertainment includes what? You may say, oh, entertainment is probably, yeah, I spend someone dinner, I spend someone lunch, that's entertainment. Well, yes, that is entertainment, but that's just one small part of entertainment. Yes, entertainment includes food. Yes, if you spend someone dinner, spend someone lunch, you spend someone food, yes, that's entertainment. It also includes recreation or hospitality. Yes, it also includes recreation and hospitality. That means if you say a client of yours come to Malaysia, right, from overseas, and you actually spend on hotel accommodation, right, for them, or you bring them to a theme park, right, bring them to a theme park for recreation, that is also entertainment. So it doesn't really mean just food, right? You can actually bring them to some entertainment outlet, bring them to a theme park, or spend on their hotel accommodation. That's also entertainment to them, right? And drink, of course, yeah. You bring them for a drink, that's entertainment. It also includes accommodation or travel. Yeah. So if your client comes, and you bring them to travel, you spend on their accommodation, that is entertainment. So all these are entertainment, right? But imagine, yeah, if you have spent on entertainment, to make it called an entertainment that is deductible, it must be in promoting or in connection with your trade or business. That means you can't spend something on someone, right, without having the intention of promoting your business or in connection with your business. Now, if it is in connection with your business, then this entertainment could be a deductible expense. But if it's not, then it is not deductible, yeah, right? And if it is, you may claim deduction, you may claim tax deduction, but it could be 50% or 100%. That is very important. So even though you say, I have spent entertainment, right? I have spent on entertainment, and this is for promoting my business, it doesn't mean you will definitely get 100%, because it could be 50% only, but sometimes it could be 100%. So what is 100%? What is 50%? Let's look into further details here. Now, to determine, first of all, whether you have incurred entertainment in the production of gross income. Now, if you say no, If you say it is not in the production of gross income, then no tax deduction at all, right? Tell you what, no deduction, even though you have spent on entertainment. So what are the examples of entertainment that you have incurred but not in the production of gross income? Things like cash contribution to clients' annual dinner. Now you may think that hey, if I have spent on a cash contribution, cash sponsorship on my client's annual dinner, that is promoting what? That is building relationship what? But unfortunately, if it's cash contribution, you don't get deduction. Yeah. If you give a gift, if you give goods, then yes, that's entertainment. But if you give cash contribution, that will not qualify for deduction at all, right? And if you entertain a potential customer, that's also not deductible. Why? Because this potential customer is not giving you sales yet. You got to entertain a customer that is already giving you sales. Then only it is in the production. If you are only giving entertainment to a potential customer, that's not in the production. That's for the production, right? Because our law says in the production. So you don't get deduction as well. If you give a wedding gift to your customer, that's personal entertainment. Yeah, that's not business entertainment. You don't get deduction as well. If you entertain employees of related companies, you also do not get deduction because these employees are not your employee. These employees are other people's employees, related companies' employees. So you don't get deduction, yeah? And annual general meeting, you don't get deduction if you have entertainment. Why? Because if you hold an annual general meeting, you don't get more sales, right? It is not in the production of gross income. And AGM will not generate more sales. So these are the examples of which you don't get deduction. So please bear in mind, yeah, if you spend on this, you don't get tax deduction. But let's say, if you say, I have incurred entertainment in the production of gross income, then now you have to determine whether you will get 100% or just 50%. Now, so what are the things that you will get 100? What are the things that you will only get 50%? You have to see whether your entertainment falls under the provisos 1 to 8 in the paragraph 139 1L, right? Section 39, subsection 1 and subsection L, right? Paragraph 39 1L of the Income Tax Act. It says if it falls under proviso 1 to 8, you will get 100% deduction. But if it doesn't fall under here, then you will get 50%. So now let's look at what are the things that will give you 100%, because these are the things that you say, I want to get 100% deduction, right? Now, if you say you have spent entertainment, for example, giving out a gift with business logo. Yes, with business logo, yeah. If you give out a gift to your client, right, and it is with your business logo, like your merchandise, your calendar, your notepad, your pen, your umbrella, your calendar, things like that. These are the things that you get 100% deduction. If you give hamper to staff, that's entertaining your staff. Yes, if you entertain your staff, you get 100% deduction. That is your own staff and your own company staff, not related company. Yeah. So you see, hamper for staff during festive season, right? Or annual dinner, right? The annual dinner to your own employees, you get 100% deduction. Yeah. And if it is a gift incorporating a conspicuous advertisement or logo, that means you are actually advertising your company's services, or products, or it is with logo, you give it to your customer, yes, you get 100% deduction as well. If it's an annual trip for your employees, that is also an entertainment, but it has to be within Malaysia. If it's within Malaysia, annual trip within Malaysia, you get 100% deduction as well. Yeah. If you give out free gifts, right? And if you give a free gift just because someone exceeds a certain amount, they hit a certain target purchase amount, and you give a free gift, that is wholly related to sales. That is also 100% deductible. Lucky draw, right? If your customer buys something and you have lucky draw gifts, that's also wholly related to sales. That is also 100% deductible. And also free trips for your dealers, right? If your dealers achieve some sales target, right, and you give them free trips, that's also wholly related to sales. These are the examples that will allow you 100% deduction. But if you say, oh, I'm actually spending, right, on entertainment, right? I say it's in the production of gross income, but I don't fulfill any of this, right? It's not under proviso 1 to proviso 8. Then do I get deduction? Yes, you get 50%, right? Things like you give out a gift without logo. right? You entertain your existing suppliers, you entertain your existing clients, right? You give hampers to them, you give a flower, right, for your client's opening ceremony. These are entertaining your existing client. You get 50% deduction, right? You get 50%. Now, so this is the concept, this is the general concept of how you get deductions for entertainment. But let's look at our case. Now, do you know that entertainment is a very sensitive issue? Entertainment can be a very sensitive expense, especially when it comes to tax audit by the Inland Revenue Board. Yes, did you know that when the Inland Revenue Board comes and check on your account, they see entertainment, they will try to find out whether you can get deduction or not. Because like I told you, entertainment can be no deduction, it can be 50%, it can be 100% deductible. So it all depends on what kind of entertainment it is, right? So let's look at our case. Now, of course, I have got some question over here. Let me just read the question first here. TS Kun asks, how do you determine or prove that you have incurred in the protection of income? Need to prove when tax audit. Now, TS Kun is simple, right? To determine whether you have incurred in the production of business income or not, you just look at which category you fall into, right? Just like I show you, right? What is in the production of gross income? Let me just repeat this. Yeah? In the production of gross income will mean things like entertaining your existing customer, entertaining your existing supplier, or anything that falls under these provisos 1 to 8. Yeah, these are all incurred in the production of gross income. Yeah, right. TS Kun then continue asking, entertainment for own staff like marketing staff can claim how many percent? Well, there's no percentage, TS Kun, if you entertain your own staff, right? Even though they are your marketing staff or non-marketing staff, right? As long as you entertain them, you can get 100% deduction, 100% deduction when you entertain your own staff. Okay, then, okay, yes, thank you, TS Kun, right? You understand that, all right? Jenny is asking, if annual trip provided to employee include employer for Sdn Bhd, only one sole director, is the employer portion not allowed? Now, Jenny Tang, if you say this annual trip is provided to employee, right, and you say there is one director and everyone goes together, it's okay, right? You don't have to take away the employer's portion because, well, the director is an employee as well, yeah? But of course, this trip cannot be just the director alone, yeah, right? It must be the whole company, right? The annual trip for the whole company, right? And of course, the director can join, then everyone also gets the deduction, yeah? The deduction is eligible for everyone's portion. Okay, TS Kun say condolence paid to customers claimable or deductible. Well, condolence is non-deductible. If you give money, right? If you give money, any money that you give out to your customer is non-deductible. But if you say you give a flower for their condolence, right? That is also not deductible. Why? Because condolence is a personal thing. That the gift for wedding, right? The gift for wedding is a personal thing. So if you say condolence, it's not deductible. Yeah, it's not deductible. Yeah. But of course, Betty, well, Betty, you are saying that condolence paid to staff family. Now again, if you give money as condolence, that is also not deductible because all money, right, given out, right, it's non-deductible. It's not a gift. But if you say condolence to family and you give a flower, right, give a flower as condolence, and that will be deductible because that is entertaining your own staff, right? So giving a flower for condolence to your staff is 100% deductible. But TS Kun was asking condolence for customer. Now, if you give condolence to your customer, you give flower, that's a personal thing. That's a personal thing. You don't get deduction, yeah? But if it's for staff, you get deduction. All right. Okay, I answer to one more, then I'll continue. Leong Su Yun is asking, Wendy is asking, what's the difference for entertainment claim by staff and director? Well, to be honest, yeah, if the director is an employee, there is no difference. But if the director is a controlling director, if the director controls the company, then, and you say, oh, this director is claiming staff entertainment for himself, then the Inland Revenue Board would have reason to think that, hey, this is personal expense, right? This is personal entertainment. This is not really for staff, right? Unless you say the director is doing a lunch, doing a dinner with other staff, and everyone, have an enjoyable dinner and you claim the company. That is entertainment for staff, yeah? So that is how you look at it, right? You have to see whether this is a controlling director and whether the director is spending on his own only or is it for the whole company, yeah? All right. Okay, I know there are more questions coming in. One more from Eve Tan, right? Let me just answer to this. Wow, more questions. Let me answer to Eve Tan, then I'll continue, yeah? Eve Tan is asking, overseas company trip to staff deductible? Unfortunately, no. Remember, only annual trip within Malaysia gives you 100% deduction, yeah? If it is an overseas trip, right, right, overseas annual trip, you don't get deduction because it doesn't fall under the proviso 1 to 8. No deduction at all, yeah? All right, okay, let me just continue. Look at our case. Now, we have got this case which I want to share with you, of which the IRB, the Inland Revenue Board, comes and audit our client, and they found out some issue. And what was the issue? Now, Inland Revenue Board came and they said, our client who is a contractor, they say, hey, contractor, right? You have incurred a substantial amount to purchase liquors. Well, you purchase liquor and you call it entertainment, right? So the IRB says, hey, this is not right. You buy liquors and you say you use it for entertaining your suppliers, your customers, and you say it's for annual dinners, right? And all these expenses have been charged out in staff amenities, right? In our clients' accounts, staff amenities accounts, they charge it out. And they say these are all entertainments, right? When they buy liquors, they say it's entertainment, and they say it's entertaining their suppliers, customers, and for annual dinner. Of course, Inland Revenue Board disagrees with this, right? They disagreed with this, and they say, right, the IRB says these expenses of which you have incurred to purchase liquor, I don't think it's wholly incurred in the production of gross income. That means the Inland Revenue Board says, well, when you buy all these liquors here, it could be for your own consumption. It's probably a private expenditure, private entertainment. It's not in the production of gross income. It's not for the business, right? And therefore, the Inland Revenue Board disallowed the whole amount of the staff amenities, right? And because Inland Revenue Board says the amount is too substantial. It's very substantial. Did you know how substantial it is? Let me just show you. Now, this is an extract. Yeah, this is an extract from the Inland Revenue Board's findings here. Look at this. Well, the Inland Revenue Board says, right, these expenses on staff amenities, right, is not deductible under Section 33 because they say it's not in the production of gross income. And what they have bought, yeah, look at this. 2012, they spent 45,000 plus almost 46,000 to purchase liquor. Year 2013, they spent 54,000, yeah, and year 2015 they spent 41,000, and the total amount that they have spent on liquors, yeah, 141,800, yeah, 141,800 spent on liquor, and therefore Inland Revenue Board says this is very substantial. You bought so many liquors, so many bottles of liquors, and you claim this is to entertain your staff, your suppliers, your clients, right? This is too substantial, so they disallowed the whole thing. Now, I think even if you're viewing this, even when you're looking into this figure, yeah, you will say, wow, this is really a lot. Spending 100 over thousands on liquor, and they call it entertainment, right? Obviously, the IRB will not allow, right? Obviously, the IRB will say this is not in the production of gross income, and therefore disallow everything. But you know what? We came in, we helped the client. How did we help the client, right? Because the client claims all these are for entertaining their clients, their suppliers, and staff, right? So what did we do? Right? How did we help them to get this matter solved? Well, this is what we did. Yeah, we appeal, we do analysis. Yeah, we first do an analysis, we analyze the expenses incurred. And indeed, we notice that there is a portion, right, in the liquors, right, expenses that they have purchased are actually entertainment for staff, right? Because these liquors were not purchased for private consumption, they were purchased for annual dinner, for staff dinner, for annual dinner, right? Therefore, right, we tell them, hey, looks like there are certain expenses that could be deductible, right? Because you claim that these are used for annual dinner. Then we did this analysis and we proposed to the Inland Revenue Board. We tell the Inland Revenue Board that, hey, there's a portion of entertainment of this liquor used for annual dinner. And of course, there's another portion used to entertain supplier and to entertain customer, right? Existing customer. And therefore, it should be only added back 50% for this portion. And those entertaining staff ones, it should be allowed 100% deductible. But how do we prove that? Now, you may ask, how do we prove that? You know, you say these liquors are for the clients, are for the suppliers, are for the employees. How do we prove that? We substantiate it with attendance list for the annual dinner. Yes. First, we show the Inland Revenue Board the payment vouchers, the invoices, right, the bank statements to show that payment has been made. Right, we show that, hey, these liquors were purchased during these dates. These are the payment vouchers to show that I have made payment to the supplier. These are the invoices from the liquor supplier and the bank statements to show that payment has gone through, right? Then we use that payments record, and we match back with, hey, you see, this was bought like just a few weeks before the annual dinner, and the annual dinner was then held later, and this is the attendance list of all the employees that actually attend to the annual dinner, right? And we tell the Inland Revenue Board, I say, during the annual dinner, all these liquors were brought to the annual dinner, right, to the staff dinner and to the annual dinner, and this is to be consumed by the staff, right? So all these liquors were not purchased for private consumption, but for the annual dinner. So the date actually matches. We have the attendance list, and we even tell the Inland Revenue Board, you can even get testimonials from the staff to tell you that they actually do have such liquor served, right, during the annual dinner, right? Now, not just that, we also show to the Inland Revenue Board, right, each time when we buy these liquors to entertain the supplier and the customer, right, we tell them this liquor is to be purchased to entertain this particular supplier. This liquor is to purchase to entertain this particular supplier or customer. You know, we put in the names in each of the invoice. Well, doing all this, what would be able to show to the Inland Revenue Board that, hey, all these expenses are actually wholly and exclusively incurred in the production of gross income. So now, if these liquors were purchased to entertain clients or customer or suppliers, you should get 50% deduction, right? Because this is in the production of gross income. Well, of course, it does not fall into provisos 1 to 8, right? But it is still in the production of gross income, and therefore should be allowed 50% deduction. And whereas those that is used for annual dinner, for staff dinner, it should be allowed 100%. Now, with all these, right, all these receipts, invoices, name of supplier, name of customer, and the attendance list for the annual dinner, and analyze all the dates, right, where the clients have the annual dinner, the dates where they actually spend meals, right, for the clients and suppliers, IRB accepts, right? IRB accepts this and drop the issue. Now, of course, right, the client claims everything under staff amenities, which is wrong, right? And but we still able to do a large portion, right? Take a large portion of the entertainment to be allowed 100%, and part of it 50% deductible. That means it's only left with a small portion of which 50% is added back. And we managed to save a lot of tax for the client. We managed to save a lot of tax and, of course, penalties, right, as well for the client. Now, so what's the rationale and what's the advice that we want to give you? Now, the advice here is that please ensure you have proper documentations, right? Please ensure all documentations are kept properly, like your invoices, your payment proof, right, of all your expenses incurred, right? Whenever you entertain your staff, your supplier, your customer, please record down the names, right? Please record down the names of your supplier, customer, staff for each entertainment expense incurred, right? Write them down on the receipt. If you purchase this liquor to entertain this particular supplier, to be brought to this particular dinner, put the name of your supplier, your customer, or even your staff down, right? And have the date ready so that in case, right, when you need to prove what is this liquor used for, you have a proper flow of when have you purchased this, when was the dinner held, and who have you entertained. Yeah. So all these, if you have maintained, right, like your participants list for your annual dinner, if you have all these kept properly, when Inland Revenue Board comes and challenge that this entertainment is not incurred in the production of gross income, you would have things to rebut. Yeah, you have all these to come back and tell them, look, this is not private entertainment. This is not private consumption. This is in the production of gross income because it is for my supplier, customer, and as well as staff. Yeah. So with that, we help our client to save a lot of tax because that 100 over 1,000, right, which was not allowed, we managed to save more than half. Yeah, more than half of them will be deductible, and of course part of it is 50% deductible. Yeah, so that is how we solve the case and help our client. Yeah, now I hope this is good for you. I hope you have learned something. Yeah, but again let me remind you, if in the event you receive any letter, any tax audit letters from the Inland Revenue Board, don't be panicked. Don't be afraid. Don't say, oh, the Inland Revenue Board wants me to pay this amount of tax, wants me to pay this amount of penalty, and you are very afraid, very panicked. Don't do that, yeah? Because if you have received any tax audit letter, feel free to text us, message us, right, via private message, right, on our Facebook page, whether it's YYC Advisors Facebook page or my own Facebook page, Tax Guru Zen Chow. Send us a message, show us your tax audit letter that you have received from the Inland Revenue Board. We can give you a complimentary online consultation. We can consult you what to do next, yeah, and of course we can help you how to solve this, how to handle this tax audit, because what we want is to solve your tax audit issues, yeah, and that is why we are here to help. All right, if you receive any letter, remember, send to us, drop us a message. We are here to help you. All right, now I know there'll be more questions coming in. All right, so now let's move into Q&A question session. Yeah, Q&A session. Just let me look into all the questions again. Yeah, all right, let me just drink a sip of water and I'll get back to all the questions. Yeah, okay, let me turn this back. Okay, let's see. I have a question here from Jenny Tang. Jenny Tang was asking, but I have been informed by your tax people, employer portion is not allowed and it's only one director as it is a controlling director. Yes, Jenny, yes, I would agree to that. Like I told you earlier, if you only have one director, right, and this is the sole director is actually a controlling director, and the director is actually claiming entertainment for his own, most probably IRB will come and say this is not a staff entertainment, this is your private entertainment, and therefore it is non-deductible, right? But if you say, well, even though this director is claiming for his own, but this is not his own entertainment, this is not just a meal of his own, right? This is a whole company's dinner or whole company's lunch, and director is just one of them, the whole thing is deductible, yeah, because it is shown that this entertainment is a staff entertainment already. It is not a private entertainment, right? So if it's just a director alone, or the director is with the family members, then of course obviously not deductible, because the controlling director can actually control the company to spend for his own entertainment. Yeah, so Jenny, I hope you understand that part. Yeah. Okay, Hazel is asking, is those entertainment tax treatment also can apply same in partnership business? Well, yes, Hazel, yeah, it applies the same to partnership business, but be very careful with entertainment to partners, which is also like the controlling director case here. Any entertainment to partners will be treated as a private expense, right? A private entertainment to the partner, unless the partner can show this is a meal or a lunch, right, for a whole company, the whole partnership business, yeah, all staff is joining, and partner is one of them, then yes, this is staff entertainment. If it's just the partner alone, or a few partners is actually having a lunch with themselves, this can be viewed as a private entertainment, yeah, because a partner has controlling power over the partnership business, right? But other things like the provisos 1 to 8, they are all applicable, right, to partnership. Okay, all right, TS Kun is asking why not. All right, TS Kun, I cannot remember what are you referring to. Why not? What is the why not for? Yeah, maybe you can repeat the question. Yeah, TS Kun. Yeah, let me answer to that. Yeah, all right. Okay, Jenny Tang says, the same for the controlling director medical fee also fully not allowed. Yes, Jenny, I agree to that. You know why? Because controlling director has controlling power over the company. If the director has controlling power and the director use the company's money to pay for his own medical expense, this is like, paying your own private expenses, right? So that is the reason why IRB do not allow a controlling director to claim expense for his own medical expenses, and it is added back. Yeah, Jenny. Okay, Roni is asking, okay, how about the director entertain or having refreshment with employee who the employee is having family relationship? Is it still can have 100% deduction? Well, Roni, you got to be very careful. When you tell me that the employee is having a family relationship, right, with the director, it may be viewed as private entertainment as well, yeah, because family members, what, you can have a family dinner, and just because the family is your employee as well, and you call it staff entertainment, that is something that the IRB will not accept, because they say it could be just a family dinner. Unless again you prove that you don't just entertain your own family members, right? It is also together with other employees who are non-family members, right? All of us are eating together, right? That means the director, the employees who are family members, and also employees who are not family members, right? All of us are eating together. Then this could be viewed as a genuine staff entertainment. But if it's just together with the family members, in the roundabout, we would say this is a family dinner. This is a family lunch or dinner. It is not a staff entertainment. Yeah, so be very careful with that, Roni. All right. Okay. Hazel said he has gone. Okay, thanks. Some partner take salary. Okay. I don't get your question, Hazel. Maybe if you have questions, please rephrase that. Yeah. Okay. Then Jenny. Jenny is continue asking. Will it be questioned by IRB if those employees are family members which is employed by the company? Yes, Jenny. Like how I answered to Roni just now, right? If your employee is also your family member, definitely it will be questioned by the Inland Revenue Board. The IRB would definitely say that, hey, this could be a family dinner. This is not really a staff entertainment. Well, so you've got to prove that it is not just a family dinner. There are other employees involved as well, right? There are other employees who are not family members involved as well. Then you show this is a genuine entertainment for staff. But if it's only your family members, then no, right? IRB will say this is just family dinner, okay? So that's why I say the name, right? I repeat this again, the name of the attendees, right? The participants, right? The names of your staff, right? Who actually join the lunch, the dinner, right? Or the meal, right? You have to have the name list ready. That is how you prove and substantiate that this is a genuine staff entertainment. Okay? All right. Okay, let's carry on. Leong Su Yun, Wendy is saying that, is it entertainment on weekend also can claim? Of course. Now, it doesn't matter whether it's weekend or weekday, as long as it's a genuine entertainment, right? As long as it is an entertainment that is incurred in the production of gross income, yes, you can definitely claim, right? So it doesn't matter whether it's weekend or weekday. Yeah. Natalie is asking, is farewell meal to staff 100% tax deductible? Yes. Now, if you say this is a farewell meal, right, to a staff, that means this person is still your staff, not resign and not your staff anymore, right? So if you want to do a farewell lunch or farewell dinner, please do it before your staff left, right? If your staff have left the company, no longer your staff, then this is not staff entertainment, all right? But if this is still your staff, yes, definitely it is 100% deductible because this is still a staff entertainment. Okay. All right. Natalie is now asking, Chinese New Year meal, lion dance, ang pao. Okay, I think you probably want to ask whether these are all deductible or not, right? Now, Chinese New Year meal, it really depends who are you entertaining. If you're entertaining your staff, 100% deductible. Entertaining your supplier or customer, 50% only, yeah? Well, lion dance. Now, lion dance, well, is an entertainment, right? So, are you doing lion dance for whom? For the staff? Or for your supplier, or for whom? Now, this is very subjective. Now, if you say this lion dance is to be done in an event, let's say your outlet opening or new product launching event. Now, this lion dance is wholly related to sales because you have a new product launching. It's wholly related to sales. It will be 100% deductible. Yeah, but if you say this lion dance, right, is not nothing to do with sales, right? It's just a lion dance that you do during a Chinese New Year. Now, why do you do a lion dance during Chinese New Year, right? Will this increase your sales? Now, it won't, right? Because it's just during Chinese New Year. Then it won't be deductible, right? It won't be deductible. So it really depends on the intention of the lion dance, right? Whether it is to boost sales or is it just, something that you do during a festive season of which it doesn't boost any sale, right? So that is non-deductible already, if it doesn't boost sale. Now, ang pao. Now, ang pao is very sensitive because if you give ang pao to your staff, it is not entertainment. Please remember that if you give ang pao pao to your staff is not entertainment, yeah, because you're giving money. You're giving money, yeah. So when you give ang pao to your staff, it's not entertainment and it's not deductible, unless right you don't call it an ang pao, you call it a special allowance, right? But if you call it a special allowance, you gotta put this ang pao into the EA form of your staff, yeah. You gotta put it into the EA form of your staff, and your staff income would increase. Then it becomes a special allowance. It becomes deductible. So remember that ang pao is not an entertainment, yeah, because it's money, right? But if you give a hamper, right, if you give a gift, right, then that is deductible because that's entertainment. Remember, entertainment does not include money, yeah? All right. Okay, Jenny is continue asking, but what if company have only have 3 director, which is shareholding 33% each? Is this all 33 3 controlling directors? Medical fee also not allowed, as many remember is family business. Okay, Jenny, I think you're being too more and more specific already. You know what, Jenny? Why don't I advise you this, yeah? Now, I know you probably have more questions about, how to make it deductible or not, right? Why don't you send us a message, right? Drop us a private message, right? So that we can look into your case further and we advise you further on what to do. Then we can be very case specific, yeah? Because you're being more and more specific already, of which I think I need to understand further before I can, get back to you. So drop us a message, PM us, drop us a message, right? Or since you're our client, right? I think you can always contact our technical team, right? We will try to see how we can help you, right? So contact our technical team, right? We have our technical team, contact them, tell them your case, right? Tell them what is your situation, and we'll see how we can help you, Jenny, all right? All right, TS Kun is asking, for overseas trade fairs and exhibition, are the related expenses allowed for tax deduction? Example, air tickets, accommodation, meals for those staff involved. Yes. Now, you see, accommodation and meals for staff is definitely deductible because these are entertainment to staff, right? And if you say you go overseas to join some trade fair or exhibition, as long as these are related to your business, as long as these are all related to your own business, then all these travel expenses, yes, they are also deductible because these are traveling expenses that are deductible, yeah, TS Kun. So you must be able to prove that this traveling is relating to your business. That means that this trade fair, this exhibition is relating to your business. Then everything will be deductible, okay? Of course, the meals, accommodations, no issue because these are entertainment to your staff. Okay, all right. Hazel is asking, how about if partner having meal with customer and supplier? Then no problem. Then that means you're entertaining your supplier and customer. You'll be getting 50% deduction, right? 50% deduction. Remember, Hazel, very important advice, yeah. Please put down the name of your supplier or customer in the receipt after you have entertained them. Yeah, this is a proof to show that you have entertained your supplier and customer. Okay. Yo Sun Guan, how for director with no shareholding can claim entertainment and medical expenses? Well, if you say the director has no controlling power at all, that means no shareholding, right? And of course, his family members, his relatives, also no shareholding. That means he himself, together with his associates, his relatives, right, his family members, also have no shareholdings of more than 50%. Then yes, the director who claims entertainment, medical expenses, definitely deductible because these are entertainment or medical expenses incurred for a pure employee. But this director will be a pure employee already, no controlling power at all. Yeah, Yo Sun Guan. Okay, Pi Hui is asking, if got 2 directors, one director is working as sales manager, can he claim for medical fee, surgery fee? Okay, same thing, Pi Hui. It all depends on whether the director has controlling power or not. If the director has no controlling power, that means no shareholding. Yeah, that means these are just pure employee. Right? If these directors are just pure employee, no issue on all the medical fees and surgery fee, etc. Right? These are all claimable. But these are not entertainment now. I mean, I'm talking about entertainment today, right? The people are asking about medical fee and surgery already, but never mind, yeah. These are all claimable. But if these directors have controlling power, then that is the issue. Because once the director has controlling power, they can control the company. The expenses incurred on the director would be viewed as a private expense because the company, the director can control the company, use the company's fund to pay for his own medical fee already, right? That means there is a controlling power. There's a private usage element in it. Yeah. So Pi Hui, if this is not a controlling director, no issue with claiming. Yeah. All right, Jessie Lau is asking, how about entertainment to bank officer? Now, bank officer, very interesting, yeah. Now, Jessie, let me ask you a very simple question, yeah. If you entertain your bank officer, is the bank officer your client? Is the officer your supplier? If they are neither, you don't claim any deduction. You see, because when you entertain someone, it must be in the production of gross income, right? That means you entertain your client because they give you sales, right? They have been giving you sales, right? You entertain your existing client. You entertain your supplier because they are part of your trade, right? They're part of your trade, so it's in connection with your trade. But if you entertain a bank officer, if the bank officer doesn't give you sale, they are not your supplier as well, you don't actually get any deduction. So entertaining bank officer, well, I don't think you will get deduction unless they are your client or they are your supplier. All right. Okay, Ling Ling is asking, flower gift to customer on their opening, 50% correct? Yes, exactly correct. Let me just show you this again. Right. If you entertain or you give gift of flower for clients opening, clients opening, you get 50%. You get 50%. So Ling Ling, you will get 50%. That's correct. Okay. Let's see what else. Jessie Lau, in process of getting loan applications. Well, in process of getting loan applications, it's not sales. It's not part of sales. Getting loan is actually a capital expenditure. It's relating to the structure of your business. It's relating to the structure of your business. So it's not for sales. All right. So Jessie, you don't get deduction, right? All right. Okay. So Pi Hui has say thanks. Then we are welcome, Pi Hui. Yeah. TS Kun say spot on. Yes. Thank you. Thank you, TS Kun. And yes, you're welcome, Ling Ling. Well, you're welcome as well. All right. So it looks like I have answered to all the questions already. Now, so let me remind you again. Let me remind you again. In case you receive any tax audit letters, right? Any letters from the Inland Revenue Board, please feel free to send it to us. Drop us a message. You can either send it to YYC Advisors or my Facebook page, Tax Guru Zen Chow. Drop us a message. Tell us what is the audit letter about, and let's see how we can help you. Because here we want to help you to solve tax audit issue, right? The whole aim here is to help you to solve tax audit issue. And remember, if you have just joined us for the very first time, this is your very first time joining us, we have got 3 episodes already, which is available in my Facebook page, Tax Guru Zen Chow's Facebook page. You can always go back there, look into the videos, and you will be able to see the first 3 episodes, on other secrets which I have revealed earlier, right? So of course, if you have just joined us, remember, follow our page, right? Go to my Tax Guru Zen Chow page, like, share, follow. Remember to follow my page, because I will be doing more secrets review, all right? I will be revealing more secrets to you, and I will be telling you more techniques to solve more different types of tax audit issues. So make sure you follow our Facebook page to get the first-hand information on when is the next secrets review session. So thank you so much. Hey, I have one more question. Let me just answer to this first. Hazel Lai says the controlling power you mentioned, it means who's control the finance or holding percentage more, share more, as in the partners is holding same percentage. Now, Hazel, now controlling actually have 2 different meanings over here. Now, there are 2 different ways to control a company. Of course, shareholding is the most simple one. If you have shares of more than 50%, not just you alone, you together with your associates. Your associates would mean your spouse, your son, your children, your parents, your grandparents, your grandchildren. All these are your associates. You have to combine your shareholding with your associates' shareholding and see whether you have more than 50% or not. If you have, then you are a controlling director. But the other way is that even if you don't have enough percentage of shares to control the company, if you are actually given the authority, let's say the constitution of the company, right, the M&A of the company gives you power to control, to decide on certain major issues or major decisions, you are also having control, right? So it depends on whether the constitution or the memorandum and articles of the company gives you that power or not, or the simple way is shareholding. That is what I mean by controlling shareholder, controlling director, Okay, so I hope I've answered to you. Thank you so much once again, everyone, for joining us, right? As usual, where we do our Facebook live session for 40 over minutes. Well, now it's already 50 over minutes, right? So thank you so much again. Remember to follow our page so that next time when we reveal more secrets, you will be the first to know when is our next Facebook live, okay? So I'll see you again next time, and hopefully we are able to solve more tax audit issues, And remember, if you have received any tax audit letter, feel free, send it to us, because what we want is to solve your tax audit issue. All right, see you then next time. Goodbye. Have a nice day. Goodbye.
相信。